A lot of investors asking about that M&A boom that could be expected for 2025. What do you think? How big can it get?
I think we're on the verge of a really big uptick in M&A. We came into 2024 thinking that the marketplace was way too optimistic about 24, that there were a number of planks that needed to be built. I think almost every one of those has been built. We've gotten through elections around the globe. We've seen rates crest start to come down. We've seen a change in administration, which will create a more favorable regulatory review and competition approach. Private equity has gotten their balance of investment and monetizations better in line. Corporates are still active. So we look at 2025 and we just can't wait for it to get going. My prediction is, other than 2021, which was an aberrational year, this could easily be the best M&A year we've had in say, 10 years.
How do you prepare for that? Does that mean PJT is ready to go out on a hiring spree? I mean, what does this mean in terms of the talent you need, the workforce you need to prepare for something that could be another start of a cycle?
Well, we knew that ultimately we were going to be in an environment like this, and it's not just about 2025. I think we are in, a multi-year cycle of extended M&A activity. If you go back in 22, 23, and even 2024, that's not the steady state environment for activity. And that's why we were so aggressive in hiring these last 2.5 years. You can't hire today. You need to have planned for this, and we've been planning for this.
So what do you think this means in terms of capital markets activity outside of M&A? If you are a private equity-backed company or a mid-sized technology company, do you sell or go public at this point? I mean, how many options are there next year?
Look, there's a multitude of opportunities for monetizations. You've got regular way M&A. You've got dividend recaps and create capital through the credit markets. You have IPOs. You have continuation funds. If you're a private equity investor, you're looking at all of those options. I think the challenge with the IPO market is the shadow pipeline of companies that are owned by private equity firms that are looking to go public is enormous. And for many of those companies, that first foray into the markets is going to be almost all primary. And that means that there's very little capital return for the private equity firm, and it's a multi-year process to monetize their stake. So I think the preferred alternative is going to continue to be sales of companies or continuation vehicles.
It's interesting because if you went back a couple of years ago, you would have most investors looking at PJT and saying it's mostly an M&A boutique investment bank. But then you do things like a large-scale capital raise for Boeing, which of course PJT was an advisor on. What does this mean about your ambitions in capital markets outside of M&A?
Well, we are a capital-light advisory firm. It's all about intellectual capital. It's not about financial capital. Rule number one, if you build a firm around intellectual capital, make absolutely sure that you have more intellectual capital than anyone else. And that means you need to have presence around the globe. It means you need to think about advice in the broadest possible ways. So from the earliest days in our firm, we've thought about having the most sophisticated debt capital markets advice, equity capital markets advice, strategic investor relations, activist defense, geopolitical advice. And we've always thought about delivering the most sophisticated advice to the most sophisticated clients, and you can't do that if you don't have those capital markets insights. So we've spent a lot of time building that out.
So, Paul, I now want to turn to the big topic of next year, which is, of course, Trump 2.0. When you think about what might change, what are you talking to clients about? What's most on their minds about the future policies of the next administration?
Well, I'm not even sure where to start. So we can talk about tariffs. So there's what has been threatened. There's what may be negotiated away, and there's what may ultimately be implemented. I think in many respects, this administration is going to be highly strategic in their use of tariffs, and I think it's too soon to tell. But one thing is clear, companies that don't have exposure to the United States want to have more exposure to the United States. If you look at European companies, 10 or 15 years ago, 15% of their assets were in the U.S. That number has grown to 30. It's almost doubled. You're going to see a continuation in that trend. That's number one. Number two, clearly less regulation, more pro-business environment. I think that's going to facilitate more confidence, more investment. You see it reflected in the stock market. You see it reflected in CEO and boardroom confidence. That's going to beget more activity. And then on competition, the reality is that in Trump 1 and in Biden 1, you had similar number of transactions that ultimately were blocked. The difference is that the Trump administration took a much more forward-leaning, let's negotiate behavioral remedies, let's see if we can figure out the deals that we really want to block and let the others move forward. Since that time, the time between announcement and close has increased 50%. That's chilled M&A. I think you're going to see, with the exception of a focus on retail and on tech, you're going to see a much more favorable competition environment.
Well, that's what I was going to ask also, because you saw the Kroger-Albertsons deal get blocked. Pretend I'm a client and you're advising me and you were to tell me, well, okay, your deal would not make it through. What kinds of deals do you think those are?
Look, clearly there are real concerns with big tech. I think the way this election was debated on issues, inflation is a real issue. Therefore, retail, where the consumers feel it, consolidation there is a big issue. So I think those two industries are going to continue to be in harm's way, big tech and retail, and you need to think about those industries differently. I think the second is vertical integration. There's always been concerns about vertical integration. I think those are going to persist. But what's going to be different in this administration is more behavioral remedies, more willingness to negotiate fixes to get deals approved. And I think you also have to get beyond the United States. You have to look at Europe. If you look at what's happened in the EU, look what's happened in the UK, their anti-competition approach has arguably harmed many of the European companies and chilled business activity in Europe. Our sense is that that mood is shifting, and I think you're going to start to see a more constructive approach to competition coming from Europe as well as the United States.
Why not now bring the conversation full circle? My last question to you, PJT stock this year alone has risen more than 50%, more than 55%. If you look over your lifetime since PJT went public, it's almost 700%. You've grown quite rapidly over the number of years. What's going to be the next leg of growth for PJT? How do you sustain that growth rate?
Well, what's wonderful about our firm is we're 9 years in, we've accomplished a great deal, but we're just getting started. If you look at our footprint in strategic advisory, it's not even half of those of some of the balance sheet light firms that we compete against. When you think about all the geographies that we have yet to fully conquer, we have tremendous white space. When you think about all the industries that we're not really present in, we have opportunities to dramatically grow the business. When you think about how well known we are today, it's far greater than when we started, but still not where it's going to be 5 or 10 years from now. So everywhere we look, we see growth. But rule number one is create the best team, deliver the best advice, and let the clients determine how much growth ultimately gets realized. So we're never going to start with growth. Growth's going to be the output, not the input.